I've been helping people get mortgages for over 21 years. During that time, I've seen a lot. The highs, the lows, and pretty much everything in between. But even with that experience, this current mortgage and housing market has been incredibly difficult to navigate and predict what's going to happen next. Now, recently, I've been getting a ton of questions asking about what's going on with interest rates, why are they going up, and didn't the Fed lower them back in September? I'll break down 3 reasons rates have gone up so you can have a better understanding of what's going on, as well as what we might see next. Reason number 1, inflation still lingers. Let's start with the basics. The Fed wants to keep prices stable and the people employed. They want the inflation to be around 2% or so without causing a lot of unemployment. But getting this balance right isn't always easy. The Fed raised rates a lot between 2022 and 2023 as a way to fight inflation. When they cut rates last month by 0.5 point, they were trying to avoid unemployment spiking too much, while still keeping inflation on the way down. Unfortunately, after that cut, it appears that inflation hasn't been dropping as fast as was expected or hoped for. And reports like CPI, PCE, as well as the retail sales have all shown that prices are still higher than we would like. This has made the markets a little bit nervous and has contributed to the rates going up as we've seen. Reason number 2, strong employment numbers. The reason that the Fed cut the Fed funds rate in September was because they had been watching employment slow down and unemployment start going higher. Now, what they weren't expecting was to get a September jobs report that showed just the opposite of that. The numbers that came out in September almost doubled what were expected and was one of the stronger reports for the entire year. Now, why is that a concern and why does that matter? Well, a hot job market can push up wages, and as people make more money, they spend more money. That can bring on inflation. So higher inflation means higher interest rates. Reason number 3, the presidential election. So the market appears to believe that we may see a red wave coming. That means that Trump will win the presidency, as well as Republicans potentially getting both the House and the Senate and Congress. Why does that matter for interest rates? Well, the market thinks that policies like tax cuts and tariffs could be coming back. And those may help the economy, and they also can tend to create inflation. And we've talked about that, what inflation will do. So there's some other indicators. I mean, even the crypto markets have kind of shown this kind of pace. So since mid-September or so, which was the lowest rating for Trump's likeliness to gain office, and it has only increased since then. If you look at Bitcoin, for example, it was around 60,000. That's now over 72,000. If you look at Trump's own media company, the Trump Media and Technology stock, that went from around $15 in the middle of September to now over $50. Again, this isn't meant to be political. It's just stating what the market appears to see happening and is pricing it. Now, what should you expect in the next few days? Well, we've got some major economic reports coming out this week. We've got GDP, PCE, as well as another jobs report coming out on Friday. And then next week, of course, we have a presidential election on Tuesday, and then the Fed's next rate decision on Wednesday. If you're hoping to see rates reverse trend and start going back downward, what we'd like to do is see the data this week come out and show that inflation is going down, as well as unemployment maybe is creeping higher. Those two in combination would go a long way to helping our cause. Speaking about helping our cause, there are a few signs that we might see some help on its way. Today's JOLTS report came out and it showed that there was less job openings than were previously expected. And that kind of hints at the labor market not being as strong. There was also continuing unemployment claims that came out last week, and those were higher, which can sometimes point to the jobs number that we're going to get Friday being weaker. And then today, Bloomberg released a report that said we might even see a negative jobs number, which we haven't seen anything like that in 4 years. So that's kind of what's happening right now with rates. That's what's been causing them to go up over the last 30 to 45 days. And that's also what we see on the radar in the immediate next few days and weeks. If you have any questions, please go ahead and drop them in the comments down below. Of course, if you find this information helpful, be sure to like, subscribe, and follow me. And we'll make sure to keep you updated as things come and always do our best to let you know what's going on.